Welcome to Explain the Charts. Today, we're dissecting the NZDUSD currency pair, analyzing both the recent news and the chart data to get a comprehensive picture of the current market conditions and potential trading opportunities. Let's begin by taking a look at the news. According to recent Google search results, the NZDUSD has been impacted by the Reserve Bank of New Zealand's RBNZ expected rate decision, with traders bracing for a further 50 basis point reduction in the official cash rate, OCR, to 4.75%. This signals a weaker economic outlook for New Zealand, potentially putting downward pressure on the NZD. Additionally, the US dollar index has turned flat, suggesting a pause in its recent weakening trend, which could further influence the NZDUSD movement. Now, let's shift our focus to the chart data. If we look at the daily chart, we can see that the NZDUSD has been trading in a downward channel for the past few weeks, with the price struggling to break above the resistance level around 0.6250. The recent RBNZ news seems to be validating this downward trend, as the pair has dipped below the 0.6150 support level. However, it's important to note that the pair has found support around 0.6100, indicating a potential area where the sellers might face resistance. Looking at the recent price action, we can observe that the NZDUSD has struggled to gain momentum, indicating a potential bearish bias. To gain a clearer understanding of the short-term dynamics, let's switch to the 1-hour chart. On the 1-hour chart, we can see a more volatile price action. The recent RBNZ news caused a significant downward spike, but the pair seems to be stabilizing around the 0.6150 level. If the NZDUSD can break above the 0.6200 resistance level, it could suggest a potential reversal of the downward trend. However, if the pair fails to break above the resistance and continues to trade below the 0.6150 support level, it could reinforce the bearish bias. To gain an even more detailed view of the recent price action, let's zoom in on the 15-minute chart. On the 15-minute chart, we can see a series of whipsaws, indicating a high level of volatility. The price has been fluctuating between the 0.6150 and 0.6200 levels, suggesting a battle between buyers and sellers. This volatile price action highlights the uncertainty in the market. Traders need to be cautious and wait for clear signs of a directional bias before entering any trades. Let's now try to correlate some of the chart data with the recent news. The downward spike on the 1-hour chart, which coincided with the release of the RBNZ news, supports the idea that the news was a catalyst for the downward movement. However, the fact that the price stabilized around the 0.6150 level suggests that buyers may be stepping in to support the NZD. It's important to keep an eye on the US dollar index. If the US dollar weakens further, it could provide a boost to the NZDUSD. In terms of potential trading strategies, we can consider a few options, taking into account the current market conditions. For short-term traders, a bearish setup could be considered if the price breaks below the 0.6150 support level, potentially targeting the 0.6100 level. However, if the pair breaks above the 0.6200 resistance level, a bullish setup could be considered, with a potential target of 0.6250. Long-term traders should focus on the broader trend and wait for a stronger confirmation of a directional bias before making any significant moves. Remember, trading involves risks, and it's crucial to manage your risk effectively. To conclude, the NZDUSD is currently facing downward pressure due to the expected RBNZ rate cut. The chart data suggests a potential bearish bias, with the price struggling to break above the 0.6200 resistance level. However, the pair has found support around 0.6100, which could limit further downside. Traders should be cautious and wait for clear signals of a directional bias before entering any trades. The key price levels to watch are the 0.6150 support level and the 0.6200 resistance level. A break below the 0.6150 level would reinforce the bearish bias, while a break above the 0.6200 level could signal a potential reversal. It's also important to monitor the US dollar index and the RBNZ's actual rate decision, as these events could have a significant impact on the NZDUSD. Remember, this analysis is not financial advice and should not be taken as a recommendation to buy or sell. Always do your own research and consult with a financial professional before making any investment decisions. Thank you for joining us on Explain the Charts. We hope you found this analysis insightful and informative.